for the month of March 2023 stood at 45.0% for March 2023. This indicates a 7.8 percentage point drop relative to the rate that was recorded in the month of February 2023. In February 2023, we recorded a rate of 52.8, and in January 2023, 53.6. So we are seeing a sharper decline in the rate of inflation between February 2023 and March 2023, with a 7.8 percentage point drop between these two time periods. From a regional perspective, we identified the Western North recording the highest rate of inflation of 67.3%, and the Volta region recording the least rate of inflation of 25.6%. Disaggregating the national rate of inflation from a food and non-food perspective, we recorded food inflation 50.8% and non-food inflation 40.6%, indicating a 10.2 percentage point difference between food and non-food inflation. Food inflation saw a much sharper drop as it recorded 59.1% for the month of February 2023, indicating an 8.3 percentage point difference from a food inflation perspective and a 7.3 percentage point difference from a non-food perspective. So the slow rate of inflation that we are seeing is largely driven by the sharper drop from a food perspective relative to a non-food perspective. From a locally produced item and an imported item perspective, we saw locally produced items recording an inflation rate of 41.9% and inflation on imported items 51.6%. indicating a 9.7 percentage point difference between locally produced items and imported items.
Well, thank you very much for joining the conversation. And so we get into that first bit. I'm sure when you heard the government statistician speaking, Professor Enim, you knew that we were definitely going to be looking at the inflationary figure for the month. And we get into that conversation now. Our guest this morning, Foster Ejaho, Head Price Statistics Unit of the Ghana Statistical Service. We also have Professor Lord Mensah, lecturer at the University of Ghana Business School. At a point, we'll be joined by our own in-house analyst, researcher, data analyst, Isaac Kofi-Adjei, who will give us a broader perspective, if you like, of what this means. But Professor Lord Mensah joins the conversation. Prof, a very good morning to you.
Yeah, good morning, if you can hear me.
I can, loud and clear. It's been a while. I hope you're well.
Very well. Happy New Year, since it's my first time coming on your show this year.
Is it? I thought we had an interaction at some point, maybe, but my bad if we haven't. Happy New Year right back at you. How do you react? What's your initial reaction to this latest 7.8 percentage point deflation in terms of our inflationary figures? Now, in February, it stood at 52.8%. Now, it stands at 45%. In the course of the news review earlier this morning, some had said that, yes, maybe it has come down, but how is it going to reflect down right to the bottom to impact the ordinary Ghanaian? We all know that our inflation is also impacted by what we choose to consume, what we choose to purchase and all of that. But at the bottom line, what does this mean for you? How did you receive this?
Well, it is a good news. I mean, inflation, of course, we all understand that if it is high, it tends up to wipe out the purchasing power of whatever income you are earning. And especially when it touches on the essential part of, our living. I'm talking about food, talking about transportation, talking about things that makes a living, and effectively, if it touches on this part, then it becomes a problem. So if it is going down, it's more or less a good signal. In itself has a way of building up into, interest rate structures as well. And of course, interest rate structures also have a way of building up into inflation. So now that the signals are that it is coming down, it's a good signal. But, we need to try to split whether, this downwards, trend in inflation is as a result of the policies that were being rolled out by the government of the day or policies that were being ruled by, the economic management team. I'm looking at the fiscal side and then the monetary side.
Right.
And of course, if monetary policy rate, tends to show a downward signal, it is expected that inflation will follow suit, because, cost of living comes down and it tends up to, make, accessing of funds cheaper. And if accessing of funds becomes cheaper, it will turn up to influence businesses, and businesses will find a way to build up into prices as well. And in a way, it brings, prices down. But I will not attribute, the sharp drop in inflation to the policies as we speak now, because Ghana is a developing country, and our inflation or our policies take some time before they reflect at the doorstep of the people, i.e. before they reflect on the market as well. So if you ask me, yes, we have these global fuel prices coming down, and once price of fuel is coming down, of course, it has a way of building up into, inflation. We've already, discussed, thoroughly that inflation in Ghana is mostly imported, i.e., if global fuel prices, tend to come down, it will have a way of building up into the Ghanaian inflation, because Ghana is an import, oriented economy. And so I'm not surprised to see inflation coming down since global fuel prices has been showing a downward trend. But, let's look at the food inflation aspect. Now, with the food inflation aspect, you will come to understand that it also has some seasons. We have, the Ghanaian context where nature has a way of dictating price of food on the market. And anytime we see the rains, you will get to understand that harvest, goes up. And once harvest goes up, tendency of prices will also, the tendency that prices will come down is very, very high. So let's not, be so enthused with the food inflation. If you plot the food inflation dynamics, you will come to understand that there's a seasonal, serious, driver, which has to do with the rains. Once we start seeing the rains, you will see, bumper harvest, and by so doing, reflect in downward trends in prices. So, but then we cannot sustain that because that is not policy driven. It's more or less, nature, driven. We want to see agri-food coming down as a result of certain policies that have been put in place and permanently will continue to, come down. And that one we can attribute it to, policies. But as we speak now, the downward, trend, which is dominated by, food inflation coming down, is as a result of, nature, more or less, the rains helping us to get more harvest, and by so doing, food prices coming down. So if you ask me, if we are to, split inflation from food to non-food, clearly the non-food component is mostly imported, which has to do with fuel and other things that, we purchase on the market. But with the food, it's mainly seasoned. The non-food is as a result of, the global price of petroleum, coming down.
I'll just follow up with this brief one. Now, if you look at it, sometime late last year, we were being told that, and early this year, we were being told we're hitting the peak of our inflation. And that appears to be the trend. Over the last 3 months, there has been a decline. Can we firmly say now that inflation is on the down foot, that it is definitely going to be reducing in the coming months?
That we have, peaked, when it comes to the economic indicators, the rate at which they were going up, interest rate, talking about inflation and all those. Anytime economy get heated up, right, at the point in time, it has to cool down. And the cooling down has to do with the policies that are being rolled out, by management of the day. So, when you look at the possibility of debt exchange that happened, you look at all those measures that were being put in place by the Bank of Ghana to ensure that, they kept the exchange rate and all those, clearly were things that tells you that, yes, we've come to a realization that we've seen our economy getting derailed. And as a result of that, as human beings and being rational as well, we may have to put in measures to make sure that we bring those indicators down. And so we got peaked around the 54 point, something inflation. And then with the policies being rolled out together with the global dynamics, we see, these indicators coming down. But let me tell you that, yes, indeed, it will continue to come down because if you look at the economic activities around the country, you will come to understand that, yes, it's gradually slowing down. Liquidity has been frozen and all those. So it has a way of, bringing down inflation. And I can tell you that it will continue to go down for some time.
What do you project by end of the second quarter or even by end of year? There are projections generally that we have from time to time. But what do you project will be likely inflationary rate at the end of this year?
I think the target has to do with to ensure that the inflation, if for nothing at all, becomes a par with interest rate. Talking about a long-term, interest rate. Or if for nothing at all, will be a par with a short-term interest rate, talking about treasury bills here. As we speak now, treasury bill hovers around, 25 to 30%. And so that is for the real value of investment. For investors to appreciate and have positive real value. It is anticipated that inflation will keep on dropping until it gets to a point where it will be at par with the treasury bill rate, which is about, 30%.
Do hold for me, Prof. Let me also bring in Foster Ejaho. He is Head Price Statistics Unit at the Ghana Statistical Service. He's been kind enough once more to join us in the studio. A very good morning to you, sir. Thank you always for coming in the studio when we call on you. And no, you are the big brother. I'm the junior brother. So these latest dynamics, 52.8% in February, 45% in March. Just give us some scope to what is happening. What is the trend? We still see that the Greater Accra region is at the top, unsurprisingly, owing to some dynamics. We have the Ashanti region also coming second when you look at the regional shares of inflation for March. But what are the real dynamics? Food, non-food, non-alcoholic beverages, transport. What went into this, and how did you come by the figures that we're seeing now?
Thank you, big brother. So generally, we measure everything. Okay. But specifically for this month, the good news we are seeing is coming from the food aspect.
Yeah.
Our food prices has gone down tremendously. Okay. Probably because there have been some harvests, I really cannot tell. Or maybe because of the fuel effect. Because now we have stability the fuel prices, and that translates to transport. And therefore, cutting the goods from the hinterlands to the cities is becoming relatively cheap. And that's what is telling the good news. Yes, the non-food, which is mostly, most of them imported, is also stable. And that's what the big lecturer was talking about, the fact that there's stability at the forest market, global dynamics are favorable these days. And because we normally would do imported inflation, so we are having that good news also coming in.
Right.
But I think the Bank of Ghana's work is really playing role. The currency has gained some strength for some time now, and therefore prices are beginning to be relatively stable on the market. Greater Accra, yes, will be the big boy because they have a greater weight. Consumption in Accra is higher than consumption in other regions, and that's why you always see their shares being high.
Okay, so interesting dynamics that you started the conversation off with. In terms of the Bank of Ghana, though, what specifically would you say has been done to mitigate against inflation? In recent times, they've been talking about what they have been doing in that regard, among others. But what has been done that you feel technically has also contributed to this?
So I think two things. One is the policy rate issue that they've been doing. So it has controlled the supply of money in the market. And we know basic economics says that when there's more money chasing fewer goods, inflation goes up.
Yeah.
And so once they've been able to tighten money supply in the system, we are reaping the effect. The second one is how they've been able to manage the local currency against the major trading currencies like the US dollar, the euro, and the pound. We all agree, I mean, some time back, we even went as far as to about 15 cities to $1. Now it's come down to, I think, I was hearing your news this morning, it's about 11 cities plus. So it tells
the problem is the fluctuation. It's not stable. So one day it is, I think over a 2-day or 3-day period, it moved from 10 point something, and the next time you went, it was almost 12 cedis again. The pound has hit almost 16 cedis within this period. So that is the problem, because let's say you can even contract something, import something on a given day, and the next day, that is the problem. But
we'll still give them the credit that indeed they are doing something, they realize a challenge, they are doing something to work on it. It may not be good in a day. Then I think the third aspect is the ability to, I think they call it essential goods, they give money to people in essential commodities.
I think the president even made mention of that sometime last year.
Exactly.
That only essential commodities would be given that backing to import.
Exactly. So that is also controlling the fluctuation in the currency. And then the controversial one is what, I mean, people are still doubting. We still have to do further studies about they call it gold for
oil.
So if you're not pumping so much money to go and buy the oil, you can control your CD. And again, we are seeing that the export prices come down. Some will tell you because the global dynamics have changed. Yes, but we should be able to measure and tell whether indeed all the good news that we are getting from the export price is because global fuel prices are coming down. So I think these three policies, for me, are good and key.
But my only take on these three policy measures that you have spoken of, tightening, which has impacted the system. You spoke about the monetary policy rate, which also impacts the bank's interest rates.
Okay.
And that is where my concern is, because that is where most people are feeling the pinch. The likes of GUTA, the Chamber of Commerce will all be telling you about that. And so now borrowing, realistically, you would be looking at about a 40 to 45% interest rate. And that is because even before the latest hike, it was around 35%. But I've also seen some figures from some banks where purportedly there could be some reductions, because you know that it doesn't necessarily mean that once the policy rate is increased by basis points, there would be an increment. Sometimes there actually could be even a decrement. So those are the dynamics in there. But let's take a...
Before you even go, let me just say this quick one. You see, it's like treating the patient who is seriously ill. You give that patient some bitter pills or injection, which is painful. So at times you need to take that painful policy decision, and then eventually we all benefit from it.
Well, that's what some people are desperate for, that those benefits return to normalcy, so to speak, especially when it comes to fuel prices, if you look at the dynamics. But this has been the biggest drop since I think inflation peaked in around December.
Yeah, I thought we had 54.1%.
This has been like, so January, February, March.
So January there was a marginal drop from 54.1 to 53.6. And then February we came to 52.8. Now we have about 7.8 drop.
What does this mean by way of projections? I mean, the Ghana Statistical Service, I know you look at this from myriad angles. What does this mean? Are these matching the projections you had? Because it means that between December and now, it's been about a 9 point something percent decrement. Did you foresee that happening as a service?
To be very frank with you, we stay off projection and targets. See, the danger is that when you do that, you are forced to meet your projection, your target. And so we just wait till we get to the market. But with the experience that we had, indeed, we are not surprised because there's something we call the base effect. Because last year, around the same period, we're seeing higher increases. And so we say that if all things hold constant, if there's no policy that change, then of course we should see even bigger drops than what we measured.
Let me bring in Professor Mensah once more. Now, when you look at this, we have Mr. Aheto saying that they don't necessarily make these projections. They are just looking at the reality on the ground. Now, this morning, I got an interesting message in the course of the news review when we put out the figure. There was someone who said, well, but does it reflect the reality on the ground The figure of 45% is not reflective of what you see. Of course, we know that there's also personal inflation. It depends on what you decide to go for, what is in your basket. But this is the generality of what the Ghana Statistical Service is saying. What do you make of it from that standpoint of this person that, look, it's not reflecting from where I sit? And as mentioned, the role of the Bank of Ghana in all of this, in slowing down inflation, do you see it to be that obvious, Prof? You would have to unmute, Prof.
Yeah, so with the reality of the inflation in our pocket, already we've been saying that in reality, a typical household inflation is more than, the 50% that was being recorded by the Ghana Statistical Service. And then in
fact, I recall, my apologies for doing this. I recall sometime last year we had a conversation, and at that time, inflation was much lower. And you said that as of that time, for you, if you looked at inflation from the things you were buying and all of that, it was over 60%, even at that time, when inflation was nowhere near. Do you recall that conversation?
Yes, I do. I do. Before I even got to that 54 point something.
Exactly.
So clearly, it tells you that there's that kind of lag and a lead effect when it comes to how policies influence inflation and how it gets to the people, right? So at the end of the day, when you look at the happenings on the ground, depending on where your consumption band is, right, you may not experience that kind of inflation that we are talking about here, which is about 40-something%. Now, if you look at collectively in the basket, they place weight on it. And in that basket, the weight depends on several indicators. One depends on the prices of, the goods on the market. Depends on, the quantities that, people may purchase. And then also expenditure weight that goes on these, items that are in the basket. So effectively, if you put all together, you may realize that, one, you may place more, emphasis on expenditure. And once you place an expenditure and your consumption band is not in the lower prices level, you may not experience, this inflation. So it depends on where you are biting, the market cake, as we speak now. So effectively, I can say that, yes, most people may not feel it. And remember, Ghana achieved, that kind of middle income status where people's consumption band changed completely. You get very few households consuming, goods that are, produced in Ghana in totality. So we're talking about, fufu and all those, ampesi and all those that you can easily get on the market, which I believe that, talking about tomatoes and all those, which you can easily get on our market, and most of them are grown in Ghana. So if you put all this together, you realize that the people's taste, may also shift the band, for which at the end of the day, the 45% will be nothing to write about when it comes to, inflation. And remember, it's not just, the food inflation that we are looking at here. We are looking at, non-food as well. Talking about your transportation, commuting to work every now and then, fuel that you consume, the spare parts that you buy. Trust me, if you put those, non-traditional consumptions, into perspective, that 45% will be nothing to write about. So effectively, it depends on where the weight of your consumption is.
And speaking of the weight of your consumption, when you look at the major drivers in terms of March inflation, furnishings, household equipment division, then you would look at interesting, utilities. You would look at housing, first of all, generally, then water, then electricity, then gas. Then you would look at other fuels as well, before you even look at personal care, social protection, transport, which seems to be stabilizing a bit on the back of lowering fuel prices. But especially when you're looking at the fact that housing cost is also still propelling inflation, and you look at water, electricity, and gas together with other fuels, what do you think the impact of that would mean? What does it mean for ordinary folk?
Yeah, so definitely you should understand that the gas that you are consuming are important. You should understand that, you know, these are all categories of the non-food aspect that we are talking about. And once the non-food and it has that kind of import orientation into our economy, definitely you should appreciate that there are so many drivers that, you know, will be moving that aspect of what? Inflation. And that 50%, 45%, you will not feel it now because it will take some time, you know, for, you know, the price that has gone down somewhere in the global market to feed into the local front of our market. So at the end of the day, it all boils out to how your weight is. Let me explain that. You know, a typical Ghanaian, if you come to a typical Ghanaian's house, he spends more on non-food, you know, items than the food items itself, because fuel is one of the main drivers. And I think if we are able to control our fuel consumption, it will have a way of building up into a reflection of that kind of the 45% that the Statistical Service has recorded.
Just hold for me. Let me bring in Mr. Aheto one more time. Now, when you look at the same drivers of inflation in March, and maybe you look at, let's say, February and January, what are the major differences in terms of the trend that you see? And what explains the impact that we are seeing? For example, this big drop from 52.8% to 45%. We're talking about furnishings, household equipment. What was the picture like the month prior or maybe in January? We're talking about water, electricity, gas. We know about the tariff adjustments. The fuel prices are also in there. What are the dynamics?
So I think the main shift that we've observed is the food and non-alcoholic beverage.
Okay.
So in the previous months, you have food and non-alcoholic beverages coming up strongly.
Okay.
And because now...
Which was the case, yes.
Which was the case. And they have higher weight. So now because we are beginning to see stability at the fuel price level, the food price level, or even price reduction, that's how come we are having this significant drop.
Okay, so from what you say, then I gather that food inflation, of course, you do weighting, right? Yeah. So one basket may weigh more than another basket. Yeah. So food inflation carries quite a lot of weight.
A lot, 43.6%.
43.6% for food. Yes. So that means that every time food inflation goes up, the general inflation is going to be impacted.
At least roughly by 43%.
Wow. Yes. So it means once food inflation starts declining by a bit, then the impact is going to be major
and that's what we always
on the general inflation.
That if we pay particular attention, even though Prof was talking about the non-food and being important and all that, if we concentrate more on the food inflation, majority of them are produced locally, we will have a good news on inflation.
I see. What do you have to say about the other dynamics, water, electricity, and the others?
So, like he rightly pointed out, some of these items have a lag effect. Electricity tariff, you may have increased it maybe about 2-3 months ago, but they keep lingering on, you know. And then for housing, rent. So today you increase your rent, tomorrow I'm increasing mine. So that one will have a long way to stay with because people vary their rent depending on when the tenant comes in.
Right.
That's the challenge that we have.
Now, when you look at the other items, so we have food inflation, we have non-food inflation as well, and then there's the regional inflation. But what other dynamics, apart from the food and non-food inflation, or maybe now that we've considered the food, I'd like to find out the non-food inflation, what is its weighting? And what items usually go into that basket? Of course, we know it's not food, but what specifically do you look at?
So that we're talking about rent, petrol, things that we use to clean ourselves, furnishing,
skincare,
everything. But you see, the non-food has a weight of about 56%.
Non-food is about 56%?
Yes. But you see, Prof mentioned something. I want to bring our mind to something. You know, he's saying that you had a discussion with him where you talk about the rate not being, it's nothing to write home about. You see, we give additional pointers. So we've listed about 20 items. You have something like groundnut that have gone up about 144%. You have a palm oil, that's about 163%.
Yeah, palm oil
has gone far beyond the average. And then if you go down, you see some other items that have 0.7. So when you strike the average for the national, then you get 45. But as you rightly pointed out, individual inflation, if I'm consuming a lot of groundnut, because we realize now groundnut is becoming a problem. So the groundnut, the shelled one, the paste, and the groundnut oil are very expensive. So depending on what you consume, that will tell you how your inflation is going up. So it doesn't mean that the 45 is really not the reality. It is, but it's because we have individual tastes and preferences, we may have individual inflationary rates.
I know something, for example, fish, whether it's jassy, whether it's, they call this one angel, and, you know, there are so many different dynamics. I see that fish prices are still very high.
And inflation has captured it. So it's
still very high.
Number 9 item on the list, fish from the sea, going very high. Probably it's because of the seasonality.
Okay.
Maybe because you're out, you know, some time ago they closed the season, and so it became scarce. And now they say the input, they're not getting the premise for, and probably the weather is not, I don't know, I'm just trying to think aloud. So it's still high, yes.
So that is how it works. That is how the breakdown is delivered, like you would see, like he's saying. So if you're going to the market and you're getting a lot of palm oil, for example, you use a lot of palm oil because you make your banku and okra stew or whatever, it means that your inflation still would likely be very high. If you're purchasing a lot of groundnuts, for example, if you're using a lot of fish, if you're like me, I prefer fish to meat. It means obviously, I mean, I bought something yesterday and then the fish I was given for a certain price, my heart, but I prefer fish. So what would I do? I took it that way. Any thoughts on these reactions from Mr. Aheto? Prof.
Yes. Yeah, so I will be careful, you know, how we look at this drastic drop in inflation, if you can hear me.
I can.
Yes, because, you know, when it comes to food inflation, there is that kind of seasonal dictate to the dynamics of, you know, food inflation. The rains are showing a good signal for us now. I mean, and so we seem to be getting, you know, good harvest on some locally produced, you know, food
items, which is also seasonal.
Food item. Yes. So that drastic drop may not necessarily be as a result of, you know, a policy that has been rolled out, you know, in the past few months. For the non-food side, yes, I do appreciate that policies may feed into that. Though we're talking about, you know, gold for oil and all those policies that were rolled out. But when it comes to the food inflation, I will be careful to attribute it to, you know, policy, because, you know, that drop that we are seeing now was so huge, and it's only nature that can provide, you know, this drop. And remember, you cannot, you know, use nature to manage, you know, as we always say.
Okay. Now, there's a quick point that I want us to get into. You would notice that alcoholic beverages, tobacco, and narcotics saw an inflationary rate of about 41.2%. I found that pretty interesting, especially on the back of the fact that we're hoping to tax some of these items in terms of the latest tax, excise duty. What do you make of those dynamics, especially if inflation is spiraling on the lower end? Prof.
Yeah, yes, I think the tax will curb that. You know, when you have alcohol being consumed at, you know, a higher level, it has a way of building up into the health bill of the country. So if one way or the other we are taxing it, or we're going to tax it, it has a way of controlling consumption. And by so doing, prices will be forced to come down. So I think policies will move, you know, those areas, I mean, when it comes to those consumption bans, the prices down, especially, you know, the alcohol.
Okay. Before I get to the projections from the Economist Intelligence Unit, so Mr. Ajahu, and I'm sorry I've been calling you Mr. Aheto for a while now, Mr. Ajahu. So you look at the food inflation, and just looking at what you projected, the contribution of food inflation, 43.6%. The general kitty, 43.6%. And you look at food inflation dropping from 59.1% to 50.8%. And that is the impact, not the entirety of it, but it shows quite an impact in the generality of the inflationary figure. But the Economist Intelligence Unit is predicting that inflation for 2023 would average about 20% in 2023. And that's why I was finding out whether you had any projections as far as that was concerned. But the World Bank predicts, interestingly, that inflation in Ghana will stay above 50% in 2023. And which is the point of interest for both of you, Mr. Ajahu, together with Professor Prof. 20% versus 50%. That is quite a gap. Economist Intelligence Unit, it will average 20%. World Bank, it will average 50% and above. So now we've come to 45%, and I'm just wondering, is it time yet to celebrate? Is it that it's decelerating now, but it could accelerate at a point, and we could be back into the 50s? That's my question to both of you.
It depends on what factors you are using for your forecast.
Okay.
So if you don't use all the factors in the basket to do your forecast, you are likely to have it wrong.
Okay.
So it depends on what the World Bank is using. Probably they're using, let's say, petrol. So if I look at what is happening at the global dynamics, they're likely to be here. If that changes, you're in trouble. And that's how we normally would take the generality in doing our computation.
Right.
It averages out.
Prof, for you, what would be your response to that?
Yes, I mean, it's the perspective and where both, what do we call it? Both units are looking at the economy from. I mean, when you talk about World Bank, they are looking at, the aggregation, how the economy will look like. I mean, going forward, taking into consideration our debt levels, how we service our debt level, taking into consideration, the macro indicators as expected. My Economic Intelligence Unit more or less comes to the level where they deal with micro information. And by so doing, they're able to detect, how the economy will build up, looking at the micro level information they have. But then I can tell you that if for nothing at all, inflation should be a par with Treasury bill rates. That's what I'm looking at. Okay. So in between the two projections, looking at 20% and then 50%, we are looking at maybe 30% thereabout, because Treasury bill rate is about 30% as we speak now. And every investor who is investing in government, instrument may want to see a positive real value of his investment. So government, policy is targeting inflation not, above Treasury bill rate. And that is what we should all look out for getting to the end of the year.
Well, what would be your consideration? Because you know that we're entering a political year. And when that happens, as you well know, there's a lot of cost, there's a lot of spending. We may be pushing for an IMF program, which, according to some experts, we could get by the end of this quarter or within this quarter. But what do you think the impact of that would be when the political machine is set rolling? It always leads to a lot of spending in the system. What do you think that could do as far as inflation is concerned? The NDC has its primaries somewhere in May. Then in November, it is the MPP. That obviously would mean that there will be a pickup in spending. What could the impact of that be on inflation?
I think we really have to be careful, and it will be tied to, the IMF program. IMF, program that we're trying to seek will not necessarily just bring money. The 3 billion we are targeting. There are some conditions that will limit the overspending that has been happening in election seasons. And so let's pray as Ghanaians that we get the IMF program. Especially getting to the end of the year, where we'll be building up into the next elections. And that will build up into, controlling inflation as well, together with the policies that has been rolled out. If we continue, especially on the non-food side, because during the elections, most of the things that are consumed by political actors are imported. You look at things like cars that are imported to do campaign. You look
the
at
paraphernalia.
And they go with fuel consumption as well. So effectively, and the movement of our political actors around the country, rallies here and there, and so obviously paraphernalia is being printed, and most of them are not printed here. They print them from China and all those. So if we get an IMF program, it will limit all this excessive spending, because remember, IMF is going to control our budget. A budget that will read with a deficit of possibly zero financing, from the central bank, and then also a budget deficit of about 5% to your GDP, if we should go by the conditions they gave us the last time we visited the IMF. So let's pray as Ghanaians that we get a program, and the program will control some of these dynamics for us.
To what extent do you feel it will curb spending? I think within this Fourth Republic, one of the periods within which we've seen Ghana going for an IMF program, and in an electoral year, from the start of or the end of one year into the electoral year, and that was before the 2016 elections. I think around 2015 to 2016, we're able to do something interesting there. But usually you would realize that even with a program going on, electoral spending is high. So I do have to ask, apart from the dynamics you've stated, to what extent do you feel it could curb spending from now till end of 2024?
Yeah, for now, we are only anticipating. The money is not even there to spend as we speak. And I can tell you that the execution of 2023 budget is even struggling. I mean, when it comes to revenue generation and expenditure lines that were line up. So it has started now, and I can tell you that the momentum will continue to get into the elections.
Interesting points made. Let's now look at the regional impact, the regional breakdown of all of this. Like you mentioned, there are certain dynamics in Accra. Of course, there's a concentrated population here, though the Ashanti region, if I'm not mistaken, has a bigger population. But this is the capital. Most of and that's another problem, ministries, departments, agencies, practically everything is centered in Accra. So there's a concentration here on various levels. But when you look at the breakdown now, 31.5% for Greater Accra in terms of the regional shares of inflation. Then the Ashanti region, interesting, 17.5%, or just about half of what you're seeing in Accra. And then it goes all the way down to the Northeast region with the least 0.7%. What went into these dynamics, and why these figures that we are seeing currently?
So if you look at the results, you realize that Western North recorded the highest inflation. And Volta region recorded the lowest.
The lowest.
However, if we take the 45 national figure and you say, with these figures that the individual regions, recorded, what is its contribution, its share in the 45? And that's what you've just mentioned.
Okay.
And so because Accra has a bigger weight, we take the weight of the region in computing the share. So Accra and Ashanti.
So Accra basically contributes a higher quota.
Exactly.
Okay.
To the inflation. But you see, Prof said something I want to, we were asking about the projection, whether, looking at what the World Bank is saying, and then the Economic Intelligence Unit, and Prof was like, well, the food inflation has come down, it's more of nature, and so it's not about policy. He's correct. But the good news is that, this time of the year, we are off the major harvest season. So if at this time we are getting food prices to be that low, if we do well, by the time we hit the harvest season around June, July, August, then the forecast that some people are giving could be true.
Okay, so it means that if now, when there's some scarcity in there, it is still getting a bit low, then it means that by the time you hit the bumper harvest,
then it should be better.
It would be even better.
Yes.
So prices of, like you can see in your shot, plantain, cassava, these are staples that people use for their fufu and everything else. So if if the seasonality effect is overcome, then we could look at even better results when it comes to inflation. Because food also contributes such a great percentage to the overall figure.
That's correct. But I'll quickly add that provided we do not have other economic policies that wins off the benefits.
So provided, for example, fuel prices don't bounce back.
Excellent. The city doesn't lose again. We don't have more taxes, then we could be going there. So or other global dynamics like we experience COVID and they say the Russia Ukrainian war. So if all this
God forbid another pandemic comes, because then that one, I don't know what else.
But today we hear some...
because every day we're being told COVID and Russia, Ukraine. If another one comes, then
this one you're reporting that there's some intercontinental ballistic missiles being fired. So we pray those ones don't come again so then we can concentrate on what we can do locally to control inflation.
Okay, but generally the effect, so the spread across the regions, any major changes in there? Are there any major changes?
Yeah, I think we are seeing some interesting trend. In the past, it used to be the northern regions that were having, upper west, northern, upper east, northeast. But this time it's coming down to the mid portion and then the coast. So it means somehow either food is not being made available to the northern regions, which is good news, if that's the case. But then we should also be looking at the middle belt. The forest belt.
You just said something. Either food is not being made available.
No,
it's being made available.
Yeah, because now they're having good results.
Okay.
So which is good news. But now we should look at the middle belt from western north through Ashanti to eastern region and look at what is happening there. It could not be that things are very expensive, but probably the rate at which they are changing is the problem.
Interesting dynamics. For you, Prof, so when you look at the regional breakdown as it stands now, what stands out for you?
Clearly, you could see that Accra is mainly driven by the non-food, inflation. Because, our activities in Accra, the way we move is mainly fueled by, petrol prices. And so it is expected. And if Accra is recording, the highest inflation, I'm not surprised at all.
Okay.
I'm not surprised, yes.
So we are looking at the Western North region, like you mentioned, with a rate of 67.3%, emerging as the region with the highest inflation. Then it is followed by the Bono region, 51.3%, Eastern region, 51.2%, Greater Accra, 49.3%, Central region with 47.2%, and Savannah region with 44.8%. So like you rightly mentioned, if you look at the breakdown, the Greater Accra region is actually not the highest in there. But when you look at the share of inflation, then that pushes it up. OT and Upper East regions both recorded 44.7%. And then we have the Upper West with 43.2%, Northeast with 43%. That's just a shade off. Bono East with 42.4%, Northern region 41.7%, Ahafo 38.7%, Ashanti 36.5%. That's interesting where the Ashanti region actually is by way of inflation. It's always been said that they are far cheaper than Accra. And in this latest dynamic, I don't know whether that is actually playing.
Let me take this opportunity to make this correction. The fact that they are recording that high inflation doesn't necessarily mean that...
Or that low. That low inflation.
Doesn't necessarily mean that it's expensive in there. It could still be cheap compared to Accra and other regions, but we're just raising the flag that the rate at which the prices are changing over time is this percent.
And for the Volta region...
I think let me come in here. I think the Ashanti region recording the lowest inflation has to do with food inflation.
Well, it's not the lowest technically.
No,
it's not the lowest. It's the Volta region that is the lowest. But the Ashanti region is one of the lowest.
That is 6.5%.
Yeah.
Yes. That's about, almost, I mean, if you rank them from the bottom, just a step up, the bottom.
Yeah.
Yes, it has to do with food inflation because if you look at Ashanti region and how we move our food across the country, Ashanti region is at the center and receive from the west, the north, and sometimes even the east. There's a part of eastern region that send food to, Kumasi to sell. And even when it comes to fish, you get, a lot of fish moving from the coast to the Ashanti region. And I can tell you that sometimes fish is cheaper in Ashanti region than when you come to the coast. So it's mainly the location and how food moves around the country.
Thanks for that input as well. Anything else you would like to add before we take our summary comments on this discussion that we've been having? Mr. Jaho?
No, I think I just would say that we should encourage and support our farmers more, because from where I sit, I say that if we do much more on the food inflation, we could be getting better results. Even if there are other conditions from outside, this could dampen the imported inflation effect. So we should support our farmers so we can increase our production and we'll be fine.
All right. On that very point that Mr. Jaho has made, support for farmers, you would realize that still they're complaining about the inputs. So diesel may have fallen, but it's still pretty high. Then they will tell you about other agricultural inputs, fertilizer prices, which are still pretty high. They will tell you about the cost of labor. They will tell you about the cost of running their equipment, most of which, if not all of which, operate on diesel, among others. And then there is also the trap, so to speak, financially. If these farmers want to contract loans, then they are met with the monetary policy rate, which impacts the interest rates of the banks. And we already know that the former agric minister was even begging financial institutions to give loans to farmers, because I think, if I recall, the quota they were getting less than even 3-4% in terms of loans given out. And now it's getting even worse. So what would you say about that point that Mr. Jaho makes about support for farmers in a bid to curb inflation?
All right. If you look at the Bank of Ghana's report, on loan extensions to the various sectors of the economy and their risk that they pose to the banking sector, you will come to understand that, agriculture is one of the least ranked sectors that the banks will lend to because of the risk that they pose. You mentioned the agriculture minister begging the financial institutions to lend to the agriculture sector. I can tell you that the banks are not ready to lend to the agriculture sector because of the risk they pose, and as a result of that, will dampen that kind of benefit that we're supposed to get from agriculture policies.
But government, I know these are private institutions, the banks, but government has to find a way of
of course,
intervening, right?
That is the essence of rolling out policies to stabilize, the agriculture sector, to ensure that agric production are not seasonal. Agric production are not dictated by, the so-called nature dynamics. By the end of the day, when you roll out policy, you have to ensure that the policy comes to stabilize the system so that the sector will be attractive to the private sector. The sector will be attractive to private sector financing. But then if you roll out policy and your production or harvest is still linked to nature, then it becomes a problem because you can't control, and especially with the climate, change issues that are happening now, clearly you will come to understand that you cannot even predict the weather for you to determine when harvest can go up for you, so that the banks can extend loans to these, farmers. So it's one of the riskiest areas. And what is expected is that government can roll out policies to stabilize the system, provide some agriculture support. Once the system is stabilized and they can easily predict, their, future harvest, I think the private sector will come in. So it's not surprising that we're not getting that kind of support from the private sector.
All right, so to cap off the conversation, 2 questions I have for both of you gentlemen. IMF deal or no IMF deal? Because we don't know for certain when we're going to get that. How do we sustain the gains that we have made by way of inflation? It is now deflation, if you like. How do we sustain the gains? I will start with Mr. Jaho right here in the studio. Moving forward, what can we do to ensure that what we have got will not be clawed back by inflation?
So I would say 2 things.
And maybe what would be your advice to Ghanaians as well in terms of dealing with these dynamics we are faced with?
Great. 2 things. One is for the policymakers. to now keep doing what they've done in the past 3 months, for which we have arrived where we are, and even do it better. So if you're able to do that, you don't even need the IMF. I'm just being, you have done something, and now you're getting the result. So keep doing that, and even perfect it, and you get the result that you want.
You're saying that if we keep doing this and do it well, we may not even need the IMF.
You want even them to support you to stabilize your macroeconomic indicators, and you're already on that path. And that's okay, you want the money to do other things. But if you're able to do it, then we are good to go.
Are you saying that it could even be practical at a point to say, you know what, IMF, yeah, nearby, I say we want a deal, but at this point, maybe we can do it on our own, so we don't want to burden ourselves with further debt?
That's what I believe. Because if you want the IMF to come and support you, manage your macroeconomics indicators, let the GDP go up, let inflation come down, reduce interest rate, and you've been able to do it, why don't you go to them again? Unless you want the money to do other things, which I wouldn't even subscribe to. But if you're able to achieve the objective, and that's what we're bringing them, and like Prof said, they will help us limit our excessive spending. If you control it yourself, if interest rate come down, inflation come down, people are happy, life is better, why go control another 3 billion loan, and tomorrow we are in trouble again?
Finally, so what would be your advice to ordinary folk in terms of dealing with our own personal inflation in these times? What would be your pearls of wisdom to share?
For me, I think we should open our eyes and listen to the data and be able to choose when we want to choose and choose what we want. What we do is we are doing 2 things. You are keeping money in your pocket. That's the effect that people have been talking about. And again, you're also contributing to the drive of bringing inflation down. Because if you don't go to those that are skyrocketing, when they are there, glut, excess supply, the price will come automatically. So we should also be kind of being careful in our choices, and we will contribute to the success that we want.
So malleability, basically. If we all ought to watch it, and in dealing with the situation, we can also help curb inflation. It also depends on our tastes. So the more we bring certain things into the market, the more the impact. Biso?
Yeah, you're right. The taste is the problem. For me, as you said, I eat fish. I hardly eat the junk food. I love kunkunti and banku and fufu. Yeah. So when we do the taste and the choice carefully, the preferences carefully, we are not the policymakers though, but we will indirectly end up contributing to what we want the policymakers to do.
Balancing act. For you, Prof, so sustaining the gains. And Mr. Jahou has said that, look, if we get the things, the dynamics that we're doing, it said that you don't change a winning team. So if you're doing something and it's working, you don't change your strategy unless the dynamics change, by far and large. What, do you agree with him that, look, if we're able to do this, we may not even need to bother the IMF? Of course, the very things, in a way, the very things we are seeking to gain, if you're already getting them, then what's your take?
Yeah, what we are doing now as a country is we are trying to position ourselves as a debt-vulnerable country. A country where we've come to a realization that we are carrying a burden. And by so doing, if we don't, hold ourselves very well, the economy might slip over. That is what we are doing now. That's a good signal. We are doing the right thing to position ourselves. But the question is, how sustainable would that be, without the IMF? And history has never supported this, Ghanaians are quick to revert back to, the kind of economy where we always want to enjoy. We always want to spend our way through. And so, for me, we still need the IMF. And in fact, we need the IMF for more than 3 years to bring this economy back on track.
All right. Just because we have you now, there's that conversation going on, the spring meetings of the IMF, the Bretton Woods institutions, basically, and everything they've been saying in one of the papers today. And we've seen it, we've heard it over time. The IMF, among others, even a U.S. secretary, talking about the fact that, look, these creditors should give us some room within which to operate and cut some deals with us. What are your expectations in terms of China and the 1.9 billion we owe them? I'm just, taking a brief detour as we end the conversation. And what are your projections about when likely we could secure that IMF deal? Are you one of those who feel within this quarter we should get it done?
Yeah, getting to the end of this, not this first quarter, but looking at
no, so we're already in the second quarter.
Sorry, getting to the end of the second quarter, we should be able to, get it done. We are having problems because of the diverse sources of, our creditors. That is why we're having these problems. And I'm looking at a spring meeting as a one-stop shop where all the creditors are coming together to be on a table for Ghana to lay it bare, to them that this is our economic situation. At the end of the day, if you don't restructure our debt for us, we might be in a dire state, and therefore you may be even losing your money as a result of that. So you may have to come to the table for us to have a convergent point when it comes to the debt restructuring. So for me, I think the spring meeting provides us that kind of a level playing field where we can take advantage of to meet all our creditors, at a time. Other than that, the finance minister may have to be traveling to China, may have to be traveling to, Europe, which they've been doing that already. But then as to whether the kind of information, because if you look at the creditor, understanding of various economies, you may have to appreciate that no creditor may want to give you that kind of free space to go and satisfy, another creditor somewhere. So if they should all come to the same levels of information, we should be able to get a good deal with them. And the spring meeting is a good grounds for such, exercise.
Sustaining the gains made against inflation. Any final words, Prof?
Yeah, I think we are doing well. My hope is that the non-food aspect of our inflation will also be controlled, and at the end of the day, the drastic drop that we've realized as a result of the reduction in food on the market will get the same with the non-food aspect, and we may have our way going. But inflation will continue to drop till it gets to the level where treasury bills will be at par with inflation.
Prof, thank you so much for making the time to be with us this morning, and we wish you the very best of the day, sir. Let me wrap in the studio with Mr. Agyahó. Any final words?
No, I think I'll appeal to Ghanaians, especially those who sell. In the past, we had this challenge because some of them also contributed to it. We were taking advantage of the situation and we're just increasing prices arbitrarily. So now we are all together in the same boat. We should also make sure we don't necessarily profit unduly from the situation that we find ourselves in. And soon we'll be there.
Soon we will be there, Mr. Agyahó. Foster Agyahó is head of the Price Statistics Unit at the Ghana Statistical Service. He joined us for a conversation. Before that, you heard delivering his wrap-up comments, Professor Lord Mensah, a lecturer at the University of Ghana Business School. Right before we take a breather, we do know water is life, and thankfully, at least, the price of water didn't increase much within this period, according to the latest inflationary statistic. But I'll proffer for you Awake. Awake is premium purified water treated through a strict purification process to ensure that every bottle on the market refreshes you better. And they have the perfect sizes for everybody. If the children are going to school, the 330 ml bottles are ideal for them. 500 ml bottles as well if you are, an average drinker. 750 milliliters if you want to drink more. And for those who always want a lot more, 1.5 liters. But if you're thinking of something bigger for your office, for your home, then you can contemplate their 19-liter jar bottles. They are big enough to service your office or your home for quite a period of time. All you must do now is drink Awake Purified Drinking Water. And remember, each time you do, you choose one for life. And here is why. With each purchase you make, an amount is donated to the National Cardiothoracic Center. There are a lot of people nowadays coming up with heart conditions and all of that. And you know how expensive that is. So when you purchase a bottle of Awake water, a little contribution is made to the National Cardiothoracic Center to aid our brothers and our sisters. You never know. It could be you tomorrow. But just remember, it's another quality product from Casapreco Company Limited. And if you want to make bulk purchases, this is the number to call: 0262 351 251. 0262 351 251. This advert is FDA approved. We take a breather. When we return, we're going to be contemplating fuel prices and, more importantly, a perceived shortage. Because yesterday, whatever the price may have been, there were some concerns about shortages of some fuel products. Super or the petrol was not available in some places. GOIL, the state oil company, came out with a release on that. Some places had them, others didn't. What happened? We'll bring you details of that after the break. Do stay.